Hey guys, how's it going? My name is Sarah and I work for Capital One, which is a bank that lends money to people and businesses. My team is called the Commercial Real Estate Group, and what that means is I get to lend money to the owners of big and small buildings, otherwise called properties. I have a lot of fun learning about the different tenants inside of a building. It could be an office building, there could be an ice cream shop, maybe there's a warehouse that ships out different packages to customers. The owner of the property usually makes its money or property income from the rent of each of those tenants, what they have to pay to be in the building. The owner of the property also has to pay something called operating expenses. Those are all of the expenses it takes to operate the building and to make sure that all of the tenants inside are able to run their business. So what we're going to be talking about today is operating expenses, what the different types are, and why they're important to running a business. So I want you to think about a shoe store, and we'll use that as our example when walking through fixed versus variable costs. So let's start with fixed costs. These are the expenses that typically do not change with output or use. Fixed operating costs are going to remain the same no matter how much they're used. So one example of this is going to be rent. It doesn't matter if you have 1 or 100 customers, you would still have to pay the same rent each month to keep the business open. Another example of fixed operating costs would be your payroll or salaries. So this is the amount of money that you pay to your workers or employees. Again, it doesn't matter if there's 1 customer or 100 customers, you would still have to pay your employees the same amount of money to do their job. The last example I'll mention on the fixed expense side is something called insurance. Now, this is something that business owners pay to protect themselves and their business and products from being damaged or destroyed. Insurance is a set cost that business owners pay, and it doesn't matter how many times a business might make a quote claim on their insurance, they typically have to pay the same amount at the beginning of the year to protect them from anything that might happen. Fire, a hurricane, anything that could potentially disrupt or destroy the business. So let's think about the flip side. What are variable costs? Well, these are costs that do change depending on output or use. So in our shoe store example, one type of variable cost would be stock, or said another way, inventory. This is what you put on the shelves, and in our case, it's the shoes. So hypothetically, the more shoes that are sold, the more shoes the business owner needs to obtain to sell more to customers. Another type of variable cost is utilities. So think about gas, water, and electricity. These are all really important to keep a business going. They typically fluctuate day to day, week to week, or month to month, depending on how long the store is open, how long you need to leave the lights on and keep the air conditioner running. Another type of variable cost is wages. And I just want to differentiate a wage versus a salary, which we talked about before. We put salaries on the fixed cost side because they're usually negotiated upfront and won't change much throughout the year. A wage, however, is paid on an hourly basis. So if I'm the business owner, the more hours I need you to work, the more money I need to pay you. Wages also typically fluctuate with demand. So the more shoes being sold, maybe the business owner needs more sales representatives. If there's less shoes being sold, they might need less number of sales representatives. So these are just a few types of expenses that it takes to keep a business going. But I wanted to touch on one more type of expense, and it's called a capital cost. Think about the cash register at the shoe store, or maybe the shoe racks that the shoes are placed on. These are also needed to run the business and sell the product. So capital costs are usually a higher ticket item. They're more expensive, but they're meant to be long lasting and keep the business going. So what have we learned today? There's all kinds of expenses that are needed to run a business. We talked about fixed expenses, the ones that don't typically change depending on use. Those include rent, payroll and insurance. And we also talked about variable expenses. Those actually do fluctuate depending on output or use. Those are things like inventory or stock, utilities, and hourly wages. There's other types of expenses, specifically capital costs. Those are the machinery and equipment that are also purchased to keep a business running, and they're usually a little bit more expensive but are meant to be long-lasting. So the next time you're out and about, maybe at the grocery store, take a look around, see if you can identify the fixed and variable costs and the capital costs. Feel free to share what you've learned with your friends and family, and keep asking good questions. I really enjoyed spending some time with you today, and hope you have a good one. Bye.